Everybody. It's good to see you all again. Um, as Jose mentioned, let me pull up our. Um, Before we kind of get into the content, I'll just a couple of quick disclaimers and a quick intro and reminder of who we are. Once again, the business of financial wellness, we focus on creating financial wellness curriculum for UME and GME programs. We've been doing this for a number of years, and so tonight you'll actually be seeing one of our different modules. This one specifically on asset protection. Um, And on that note, remember this is educational. Our intention is to provide you with some good basic financial education to be better prepared to make financial decisions now and in the future. That being said, we can't give specific recommendations to a personal financial situation. However, if you've got those types of questions, I would encourage them tonight. I can definitely give you things to think about that I think will help steer you closer to an answer. Um, so once again, feel welcome to ask and engage. That's really going to benefit everybody in the room. Fine. And lastly, we will have a post-session survey. It's going to be a quick QR code that pulls up at the very end. The only thing that we would ask of everybody tonight is if you can take a few minutes to fill that out and give us your feedback, things you like, you didn't like, or if there's other content you want to see in the future. I think that's a really good place to put that information. So. Let's talk about asset protection. You can see here on the screen, I've got a couple of different kind of maybe types of insurance policies. That's one thing that we think about when it comes to asset protection. We're also going to talk about, as you can see on the screen, liability protection. There's a lot of different ways that you can protect yourself from lawsuits, and that's really important as a physician. I think that this is one of the most overlooked areas when people are doing their planning for a couple of reasons. I mean, this is not what people really like to talk about. Insurance and liability protection, they have costs associated to them, right? So there's that. And then I think also everybody, what they'd rather talk about is, hey, what ETFs, what indexes do I need to invest my money in? What are some really cool tax strategies that I can minimize my taxes with? Those are things that people like to focus on naturally. And I think that's all great. But what we commonly see is that is all done with an kind of an overlook on the protection items. And when you look at this as a physician or really as a high income earner, you can go Google the number one reasons for bankruptcy. And these are typically going to be either healthcare costs, right? You got health insurance to help cover a lot of those things, but also along with that, the lack of the ability to then go earn an income, right? So we're going to talk about how to protect ourselves from those things, but all of the things we're going to talk about are going to be there to make sure that, hey, if I invest, if I grow my money, that's all going to work out well as long as that all goes to plan, right? If something happens along the way, a lawsuit, an illness, an injury, now all of a sudden none of that stuff's going to work out unless we establish the right protection, right? So we're going to talk about that. I'm going to talk about also how to purchase it. That's a big question a lot of people have. You've got benefits that are offered through your employers typically. What's the difference between that and buying things on your own in the personal market space? So we're going to talk about those things tonight. And that list was not an all-encompassing one. It's the only other thing I want to add there. Um, Before we get into the different types of protection items, once again, let's start with purchasing these types of things. There's really two avenues to purchasing insurance. Most commonly, people are doing it in what I would call a group setting. You'll see that on the left-hand side. When I say a group setting, that means you've purchased your insurance through your employer, right? Typically, people are doing this with your health insurance. Most hospitals are going to have malpractice insurance that they offer there, dental, sometimes long-term disability, right? That's something that we're seeing more commonly offered as well. So those things are offered through your employer. The benefits, there's pros and cons to everything in life, right? No different with some of these topics, right? And so on the group side, the benefits are that it's easier to get these kind of things. Typically, especially when you're doing life and disability insurance, you have to apply and qualify medically. There is no medical underwriting typically when you are buying things through the group insurance policies, right? So that makes things easier, especially if you have a medical history. This may be one of your only avenues to get some of these types of coverage, right? So there's those benefits there. Sometimes, not commonly, sometimes you can get a lower cost on some of these insurance items. I would say that really definitely applies to the disability insurance. Not so much as you would think on the other items. But once again, another potential benefit is it could be a little bit lower cost. Now, what are the drawbacks to that, right? Number one, you'll see on the screen here, not portable, cancelable, and renewable. What I mean by that is anytime a group insurance policy is put in place with an employer, that's renewed every year between the insurance company and the employer, right? And so most of the time they try to renew things and not make any changes. It's easier for everybody. But when things are not going well sometimes, when costs are extremely high, or when the companies are kind of looking to make changes. Sometimes you will see these benefits change. And if you have only purchased all your benefits through the group setting, you're going to have to live with whatever the new offering is. Sometimes they could cancel some of the coverages that they've been offering you. And now you're at a point where you've got to then go look into the personal marketplace to go buy those things. They're going to be more expensive typically, and they're harder to get, right? So just keep in mind, there's pros and cons to buying it on the group side. It's definitely something that you need to be doing, but just be aware of some of the drawbacks because the personal side of things is really going to be the way of maybe filling in some of those gaps, right? So on the personal side, right, if you go out on your own and you buy life insurance, disability insurance, you can technically do it with health insurance as well, any of these insurance items. Um, Typically, they're going to be a little bit higher cost because you're buying them individually. And there's going to be medical underwriting. We'll talk about that in a little bit, but that means you've got to qualify medically. It's not just, hey, can I afford to purchase it, but can I qualify medically? Will they give me that kind of coverage? Um, so you've got to kind of keep that stuff in mind. But the benefits to a personal policy is that you own that policy, right? And that means a couple of different things. A, you can take this policy with you wherever you go. So if you're changing employers, doesn't matter. That doesn't affect your personal insurance policy. It's going to go with you wherever it is, wherever you go. They're also non-cancelable and guaranteed renewable. What that means is once you sign a contract, especially with like life and disability insurance, they can't change that contract on you. They can't cancel it. The only person that can cancel that contract or change it is you, the individual that purchased it, right? So there's a lot more control, there's a lot more predictability when you purchase things on the personal side, right? And ultimately, what do most people need to be doing? It's probably a combination of these two things. We'll talk about that, but once again, there are pros and cons to purchasing these things, whether you go on the group side or on the personal side. The other thing, when it comes to purchasing insurance items, keep this in mind, especially on the personal side. When you're comparing a couple of different insurance products, right? Keep in mind that all these insurance companies are using the same data when it comes to pricing their risk and pricing what they would charge for their insurance products. It's really kind of called the law of large numbers. And through that, they can tell you basically if you have a room of 1,000 people, the insurance companies can tell you not who is going to be disabled or who is maybe going to pass away in a certain amount of time, but they can tell you the number of people in that room that are going to pass away in a certain amount of time or become disabled. And they're going to be pretty accurate with those numbers, right? They can't tell you who, but they can tell you the numbers typically. I'm saying all that to say that if you're comparing two insurance policies, could be life insurance, could be auto insurance, could be disability insurance. If you're seeing a significant difference in the cost, that should be a red flag. There's typically something in the fine print. The cheaper one is not covering that the more expensive one is. That's not always the case, but typically it is, especially when you see a big difference in pricing. If it's a small difference, sometimes it's just one insurance company is a little bit more competitive than the other, right? But keep that in mind if you're comparing different types of products from different companies, right? The other thing that I will say with most personal insurance products, so auto insurance, homeowners, life, disability insurance. The cost of an agent is built into those products. All right. So if you go out there, you can go out on your own and try to do all this due diligence. You can reach out to the insurance companies, figure out the options, figure out what's best for you, and go buy the policy on your own. You're absolutely allowed to do that. What I would say to people is, look, if the cost of an agent is included in that, I would go hire someone. Now, granted, make sure they're a good agent, but go interact with one of them and let them do that work for you. Let them do the paperwork. Let them find out the different prices and show you what the differences are. I would just encourage that because it saves people a lot of time, a lot of money, and a lot of trouble because you're not going to be an insurance expert overnight. So once again, don't shy away from using an agent because you're going to pay for one whether you do or don't. Obviously, if you want to go do it on your own, that is your prerogative. At the very least, address it, whether you do it with an agent or not. Get those things addressed. And then the last thing is I've used this term once or twice, medical underwriting. Just keep in mind, once again, especially for life, disability insurance, we're going to talk about this in a little bit. You've got to qualify medically, right? And so that's why when you typically see people talk about insurance, they encourage you to get it while you're younger, not only because you lock the costs in at lower rates, but that's before all these medical issues potentially come up, right? And if you do have medical issues, what that means is either the insurance company can raise the price on you, or they can maybe not even offer it to you, right? So keep that in mind. On the personal side, medical and financial underwriting is going to be required. Let me pause for a second. If there's any questions, I'll give everybody some time. Feel free to either chime in or you can go ahead and put it in the chat box, and we will definitely address any questions that come in there. Now that we've talked about purchasing insurance and just kind of good rules of thumb around that, let's actually kind of go into a lot of the different items that you need to be considering, right? Everybody's different. How you approach this is going to be different for each of you. But first and foremost, let's talk about liability insurance. As a physician, this is a big deal, right? Typically, you've got medical malpractice that's going to be offered through your employer, right? And that covers anything that could potentially come up while you're practicing. The other thing just to keep in mind, if you, especially if you've moved employers, make sure that tail malpractice coverage is there. What that does is basically, once you leave an old employer and get rid of their malpractice insurance, the new malpractice insurance at your new employer is not going to cover you for things or claims that come up from the old job, and the claim ends up coming up as you're working for the new employer, right? So a tail malpractice policy will cover any claims that come up after you left the old employer, at that old employer. So just, make sure, once again, if you've moved practices or moved hospitals, see if the hospital will offer that to you. If not, you may need to go out and get it on your own, but just be aware of what that is and when it's needed. So on the liability side, that malpractice is a really important thing. A lot of people, it's just kind of automatically offered for them, but if not, make sure you got it. On the personal side, when you're not practicing, right? We were just looking at malpractice, and that covers you for claims or liability while you're actually at work. What about outside of work, right? Your liability protection for personal items is actually wrapped up in your home, your auto insurance, right? And so you see kind of the three big areas of personal liability insurance here on the screen. Like I said, auto insurance, homeowners insurance, they provide protection for those items, right? In addition, though, they've got liability protection wrapped up into it. Okay. And so, as an example for auto insurance, you'll have, if you look at your policy, you'll see three main limits of liability. These are just hypothetical coverage amounts, but these are amounts that we typically see people have, right? And you can see here bodily injury, personal property, personal injury, all these different things have their own kind of coverage amounts. Take a look at this. Make sure you have the right amount. I mean, one thing, when I look at this screen and I see property damage, each occurrence of $100,000, well, if you have this policy and you go, you're at fault for a wreck and you've just totaled a $150,000, $200,000 car, and there are plenty of those in the city of Houston, well, this policy is not going to cover all that, right? So once again, look at your limits of liability on the auto insurance side, make sure they're sufficient. And make sure that you look at an umbrella policy. This is equivalent of kind of your malpractice at work. Your umbrella policy is just general liability protection for you as an individual. Okay. So when you have your homeowners, your auto insurance, like a homeowner's insurance, the maximum amount of liability protection you'll typically see is about 500,000. Typically it's less, but that's about the max. So in the event that you are found liable for something, it could be a car accident, it could be we had a party at the house and somebody slipped on the pool deck, hurt themselves. Those are kind of things you could be found liable for. If it's over $500,000, you're going to be on the hook personally for those kind of for those kind of liabilities, right? So an easy way to protect yourself is by looking at getting an umbrella policy. $1 million umbrella policy, $1 million of protection would typically cost, 30 bucks a month for most people. So it's not very expensive. You can talk to your homeowner, your auto insurance agent, have them quote it out for you. They can help you buy it. This gives you, in this example, if you bought $1 million umbrella policy, that would go on top of the 500,000 that you've got built into the homeowner's insurance. So now you've got $1.5 million of liability protection. And I promise you, because the insurance company is now going to be on the hook for it, they're going to put their team of attorneys on these cases if they feel like they can reduce the claims or what they need to pay. So it's a really good position to be in if you find yourself in this predicament. But make sure you get the umbrella policy. And this, I know a lot of you are probably sitting here going, "Hey, this is great, but Ryan, I'm a resident right now. I'm not even practicing yet. I don't even have any assets for them to come and take, right? If I am liable for something." Don't think that that's going to get you off the hook. If you don't have the assets already built up on your balance sheet in a savings account or investment account somewhere, they're just going to start garnishing your future wages. So that umbrella policy will not only protect your assets, but it would also protect your future income earning potential in the event you're found liable of a lawsuit and you don't have the assets to settle it, right? So this is something I would be looking at sooner rather than later if you don't already have this type of protection. Questions on that? Let me pause for a moment. Okay. We can come back to it if somebody comes up with a question there. But remember, that umbrella policy is on the personal side. That is your liability protection outside of work. Okay. The other big insurance items, we're kind of going down the list here of really some of the more important ones to address. Health insurance is obviously extremely important, right? I'm not going to go too much in depth here because it is a standard offering for most companies. You'll have a couple of different options. There's different deductible amounts, different coverage benefits. And so you're just going to have to choose between that. Obviously, make sure you've got some health insurance in place, right? Most of the time, a lot of these hospitals will subsidize at least part of the cost, so you'll get a fairly good deal. But once again, number one reason for bankruptcy is health medical bills that people couldn't pay. So health insurance is the first line of protection against that, right? Um, Other than that, what I wanted to spend a little bit more time on here in this slide is long-term disability insurance. This is something a lot of physicians, especially as you're going to go out and start practicing, you've probably had people come talk to you about this. You're aware that you probably need to do something about it, but when, why, what do I do, right? Think about, and when you're looking at especially life and disability insurance, one of the things I would encourage you, the way I would think you to start looking at this is you are, as an individual, when you go out there and earn income, that is the number one asset that you've got. Your ability to go out there and make money, unless you're sitting on millions of dollars in a trust fund or you won the lotto or something and you've already got the money, your number one asset is your ability to go out there and make money. And so if you just took, for example, let's say you're going to come out making $250,000 a year. You're going to work for the next 25 years. And I'm not even going to incorporate raises, bonuses, none of that stuff. Let's assume you make 250 a year and that never changes for 25 years. Well, we've got about $6.25 million that will be passing through your hands in the next 25 years, assuming no raises or bonuses. That is the value that you bring to the table for your plan, right? So when I say you're the number one asset, that 6.25 million should be far and away higher than what your home's worth, what your car is worth, or anything else that you really have of value. And you want to make sure that that's going to come in no matter what, right? Because typically you're using that income to dictate what life you're going to live, what retirement plan you're going to have, what your kids are going to eat, what they're going to wear, where they're going to go to school. It's all dependent upon the income that you're bringing in. And if that stops, that's typically going to be an issue for people unless, once again, you're sitting on a whole pile of money. Then I would argue that maybe you don't need the disability insurance. But for any of us that need the paycheck to keep coming in to make sure that not only we can pay bills, but also save for retirement, disability insurance is extremely important.
Hey,
Um,
Ryan. Sorry to interrupt you. Before you move on, just let you know that there is a question in the chat room regarding the disability.
yes. Okay. That's a really good question, Jimmy. I will address that. Let me finish my thought on this, and that's going to kind of lead me to that. That's a really good question. Um, so once again, this is a really important thing. One of the most important insurance policies that you're going to have to buy, right? Because your income's the source of everything. Now, that applies for anybody who needs their income. How are you different as a physician, right? Well, as a physician, you're really trained, you're highly specialized in what you do. So, one of the things you want to make sure that you have as a rider, this is a rider is an optional add-on to your disability policy, is true own occupation coverage, right? What that means is if I get hurt or sick and I'm a surgeon, right? If I can't practice surgery because, I lost my hands in a skiing accident or something like that, well, they're going to pay you an income to replace your income as a surgeon, right? Regardless of what else you are professionally trained or qualified to go do. Okay. This is a really good example of the difference between a personal policy you can get on your own and a disability insurance policy you're going to get through an employer. What you get through an employer, a group disability policy, is most of the time, 90% of the time, not going to have true own occupation coverage. So the way that it's going to look at work is they're going to say, hey, we're going to pay you a benefit as long as you're hurt or sick. But after a year or two, we're going to audit things. And if you are reasonably educated and physically capable of going and doing anything else, we're going to tell you to start doing that, and we're going to stop paying that paycheck or stop giving you the disability benefit because you don't have true own occupation coverage, right? So that true own occupation coverage is extremely important for all of you. The other things to make sure you want to look at in your policy is A, you can build in the ability to increase your coverage later as you're making more money, and you don't ever have to go back through these medical questions, medical exam, things like that. So the coverage increase option is really important. If you know you need more coverage later and you want to make sure you can get it no matter what, put that in there. If your medical, background changes, it can be an issue. So that'll protect you from that. Student loan rider is an option. So once again, for those of you that have significant student loans, what that does is in addition to having a monthly check come in from the insurance company that you can use to spend on whatever, they're going to send you an additional check that you have to apply to your student loan payments, right? So keep that in mind. And then the last thing is the cost of living adjustment rider. When you buy a policy, let's say your policy pays you $5,000 a month if you're hurt or sick. If it's a long-term illness or an injury, that 5,000 is going to spend less and less each year because of inflation. So to keep that 5,000 a month up with inflation, that's what the cost of living adjustment rider does. And each year, the 5,000 a month that you're getting is going to go up and up and up to keep up with inflation. Okay. That doesn't have to be on the policy, but those, there's probably 15 riders you can add to a policy. Those are the four major ones that I would be looking at if I were a physician, right? If you don't have a student loan, you don't need the student loan rider. But look at those things. Once again, buying it personally means it's portable. So that means, hey, if I lose my coverage at work because they change their benefits, if I go get a new employer, this follows with me. The prices are locked in, they never change. And then let me get to this because this was Jimmy's question. It's a really good question. It's something that's really important to point out. What Jimmy said was, hey, I get these emails from insurance agents for life disability insurance, and they claim that there's no medical underwriting needed. Do they truly mean not even reviewing the medical records, or do they just don't require you have a physical exam, right? And so this is a really good question because up until about 2020, before COVID, if you wanted to apply for life and disability insurance, you have to answer medical questions and you had to do an exam, right? And that exam would just be a basic blood, urine, they're going to ask you some of the medical questions, but nonetheless, you had to do it no matter what. Things have changed now, and especially as a resident or fellow, what they do is they say, hey, as a resident or fellow, you are going to be able to get a lifetime discount. Most of the time, it's about a 10% discount with these insurance companies. So that's one of the reasons I would look at getting this in place as a resident or fellow before you practice, you're going to get a little bit of a discount with these companies. In addition to that, it's simplified medical underwriting. So to answer your question, Jimmy, what they'll do is they ask you the medical questions now, right? Based on how you answer those medical questions, they're either going to say, "Hey, everything looks good. He or she said no to everything. We're going to offer the coverage. We're not going to ask any more questions. There's no medical exam. We're not ordering medical records, none of that." That is going to be an option for every resident and fellow that applies. The caveat to it is if you answer on there, for example, "Hey, I've got a cancer history diagnosis," right? Well, then I would expect them to order medical records on all that stuff. They're going to run an exam. So it's not that it's guaranteed that you won't have to do the exam, but there's a chance that if you answer the questions and everything's easy, you don't have to do the exam and they won't order medical records. Jimmy, I know that was long-winded, but did that answer your question? And to your last point about the pre-existing conditions, that those, if you answer stuff on the medical questions, they're going to pick up those pre-existing conditions. They probably won't cover those. So it doesn't get you around that. But that's a really good question, Jimmy. Thank you. People need to know that because once again, this is the cheapest time for you to get it, and it's going to be the easiest from a medical underwriting perspective. So that's it on the disability insurance. I'll come back to it if we've got more questions. But I want to make sure that we get through a couple of these other items. Um, on switching gears from the disability insurance, couple of really the two other big items that most people need to be looking at some point, life insurance and long-term care. Now, I'll start with the life insurance. There's really two reasons why you would need to look at this right now. A, if you've got family, whether it's kids, it could be parents, people who are relying on you to go out there and earn an income, and if not, they're going to be in a bad position. Those are people you're buying life insurance to replace your income at that point. Okay. And a simple way of calculating what you need, it's kind of using the 4% rule. Every $1 million of death benefit that you have passes to your family tax free. They're ideally going to try and put that in some interest bearing account, but not one that has a ton of risk. So let's just use a high interest savings account right now. So if you're getting 4% on that every year, that $1 million is generating $40,000 a year for the family, right? So if you're bringing home $100,000 pre-tax, you probably want to have about $2 million of coverage to fully replace that $100,000, right? Now, the question you have to ask yourself is how much of my income do I want to replace for my family? Everybody's answer to that is different. This is just giving you kind of a framework on calculating what you need. The other reason you would need to buy life insurance now is related to student loans. For those of you that have public student loans, you probably are aware that if you pass away, those are forgiven in the event of a death. However, if you refinance your loans or if you have other private debt, that is not forgiven in the event of a death, right? And so simply put, hey, if you go out there, you got $500,000 of loans or $250,000 of student loans, go out and buy a $250,000 life insurance policy to just make sure nobody else has to pay that for you in the event you pass away. If you're young and healthy, that might cost you $10 a month to do that, right? So that would be the second reason for you to probably be looking at life insurance at this point in your career. Now there are term insurance policies, there's permanent insurance policies. I'm not really going to, we'd have to do a whole class on the differences between the two. Just know that there are options between the two. If we have time later, I can answer questions on that if anybody's got specific questions related to term and permanent insurance. Other than life insurance, though, look, long-term care insurance is something that, what this does is address if you are going to need long-term help and you're not going to recover. Typically, we think about this for elderly people, but this can happen to people in their 40s and 50s as well. If you're going to start needing round-the-clock care for some reason, right, that is extremely expensive and it is not covered by Medicare. It can be covered by Medicaid, but you have to get rid of all your assets and it's probably not the highest quality of care, right? So to protect yourself from that, that's what long-term care insurance does. It provides money to come in and pay for whatever kind of care you need. It could be at your home, it could be at a long-term care facility, but that's what long-term care is for. Why do I bring it up to people here? At some point, yes, you will need to address this for you personally. The one thing I do want to point out is make sure that you talk to your parents, your family members about this, especially if what we see is a lot of times if the parents of physicians don't have a plan for this and then they run into the issue, it's usually the child with assets and income that has to step in and help. And so if that's a concern for if you want to make sure and protect yourself from that, talk to your parents, make sure they have a plan for it. So that's really why I bring it up. Obviously, as you get older, it's something you'll probably want to address later. I'd say it's probably not something you need to purchase right now, but just be cognizant that it's out there. Any questions? I'm going to talk about estate planning. I'm going to talk about some LLCs very quickly, just so people know what those are. But any questions on any of the insurance items before I keep going? Okay. Last few things I want to hit on here is a couple of basic estate planning things. And while this maybe not might not seem like a protection item at first, this is to make sure that things are carried out as you want. And it does provide a couple of different layers of protection depending on the scenario. So I'm going to kind of walk through these things. And it's important to make sure that at some point, especially if you've got family, and especially if like you own a home and you've got assets and things that would need to be handled in the event that you passed away, right? And you've got to have somebody else kind of handle it for you. That's where you need to start looking at some of these estate planning items and some of the basics to make sure everybody at some point probably needs to put this in place. Durable power of attorney for healthcare and for finances. And both of those things really just dictate who can make healthcare, who can make financial decisions for you on your behalf if you can't do it for yourself. So once again, make sure that those things are in place at some point. Um, the living will, this is going to dictate how you want to be cared for medically. If you can't speak for yourself, but you are still alive, right? So that living will can be very important for that. And then the last will and testament. This is what most people, when you hear of a will and you hear people refer to a will, that's what they're referring to. That's just really outlining how to distribute your property in the event that you pass away. And so making sure, especially as you start to build up assets, one of the things that people don't, I think, realize is if you don't have a will in place, your assets go through a process called probate, and you have to pay an attorney to help probate that will, and it can get very expensive, right? I mean, it's a percentage of the amount of assets that you have is typically what an attorney will charge. So to draw up a will, it can usually be $1,000 with an attorney, 400 or 500 if you go on LegalZoom. That is obviously a much more effective, cost-effective way of dealing with a will than not putting a will in place and then having everything go through probate. It would be a lot more expensive that way. In addition to now somebody else is making these decisions for you, it's probably not going to go down as you would want it to happen. Could, but those are the issues with that. So from an estate planning perspective, make sure you start to have this kind of stuff in place. Make sure your parents have it in place. Be aware of it. Might not need it right now, but you will. The last thing I want to touch on is limited liability companies. I know most people are likely probably going to go the academic route. They're going to be an employee at one of these institutions, and that's totally fine. There's usually a handful of people in the group that at some point want to either go the private practice route or they want to have investments like real estate or surgery centers, things like that. And so I just want to hit on this just so you know what it is and why it's important. An LLC, people have heard of setting up an LLC or setting up a company. When you set up an LLC, one of the things you have to decide is how it's taxed, S Corp, C Corp, all of those things. I'm not getting into any of that today. So there is a tax component to this, but today I just want to focus on the liability protection it provides. If you set up an LLC, whatever assets are in that LLC are kind of held separate from your own personal assets, right? So, for example, if you have a rental property, you want to think about putting that in an LLC. That way, hey, if there's a liability, if there's a lawsuit that's tied to that rental property, let's say a renter files a lawsuit on you for some reason, well, that lawsuit can't kind of bleed over into your personal assets. They can't start going after your personal bank account and your personal investments, right? So that LLC just kind of sets up a moat and protects the liability, as it says here. The personal assets of that LLC owner are typically protected from the company's debt and legal obligations. So if you're going to do anything as an example, invest in real estate, open up a surgery center. It could be any kind of center related to your specialty. Or if you're going to own a practice, make sure you're setting up an LLC to kind of set up that liability protection. Okay. So let me pause for a moment. I've got this QR code. I want to pull this up so everybody has time to take a snapshot and take a minute or two just to do that questionnaire. But in the meantime, while everybody's doing that, I want to pause for Q&A. Any questions that we've got on insurance products, disability insurance, underwriting, anything that I can answer, we'll be here to answer. So I'll give everybody time for that. But thank you all for your time tonight. I hope you got something out of this, and we appreciate everything that you all do. So please let me know if we've got any questions. Let me check the chat box one more time.
There's
Cool.
nothing in it.
Cool. Thank you, Matt. Thank you, Jimmy. Thank you, Sharita.
Are you there, Jose?
Yes, sir.
Is there anything that we could maybe answer some of the common questions that you maybe get or common spirit individuals get within the recruiting process that we can help maybe further explain to the participants regarding this topic matter?
I think if we had some of our Common Spirit team members on the call, I think they'd be able to um, be a better resource for that. But we don't. I can ask and certainly direct them to you, Sylvan and Ryan.
Sure.
Um, but unfortunately, I'm not too involved in the actual recruitment
Okay.
process.
Okay.
Yeah,
I just thought maybe, sometimes sometimes they had this very similar questions.
sure, sure. For those still on the call, feel free to unmute or, submit through the chat box if you have any further questions while we still have time here.
I mean, even if you have financial questions, we're more than happy to answer. I mean, this is the subject matter that Jose asked us to speak about, but if there are other questions that you may have, I mean, this is an open forum. I mean, that was one of our goals is to enable everybody to ask questions.
Well, as you mentioned, Jose, if stuff comes in afterwards, feel free to shoot us an email. We can get responses out to people.
Perfect. Thank you so much.
Absolutely. Thank you, everybody. We appreciate y'all's time.
All right. Well, thanks so much, everyone, for taking the time today to join us. Welcome back, and we're looking forward to a successful second part of the academic year. Really appreciate Sylvan and Ryan for taking your time here, for giving so much time to our series. Really appreciate you um,
Absolutely.
joining us. So, if I receive any questions post session, I'll go ahead and forward them over to you. But thanks again, everybody. This session is recorded. We'll go ahead and post it on our website. But feel free to send me any questions, and we can get you connected.
Happy New
Hey,
Year.
Jose, so are you going to just, since everybody else is closing tomorrow because of the bad weather, I assume the hospitals are just going to close? Nobody needs to
Yes.
show up for clinic or anything like that?
No. We'll be working, but I don't think it's
That's
going to get
good.
as cold down here as it is in
No,
Fort Worth area. So good
Yeah.
luck with that, Sylvan.
that's true. That's all right. I'll be home with my kids. School's already canceled.
Oh, great. Enjoy that. All
Thanks,
right.
man.
All
Good
right.
night,
Have a good night,
everybody. Happy New
everybody.
Year.
All right, take
Happy New
See you
care.
next
Year.
time.
Bye.